Put a single drop of water in your hand, and it vanishes. Put that same drop in a glass, and it has shape. Put it in a tank, and it has weight. Put it behind a dam, and it can power a city. Same water. Different level. Money works exactly the same way. Most people fail with money not because they're bad with it, but because they're using the wrong strategy for the level they're on. I know this because I lived every level, from my first 100 to my first million, and today I'm going to walk you through each one. Level 1. The $100 Investor. 20 years ago, I was 23 with $107 in my savings account. Working as a junior accountant making $35,000 a year. After rent and bills, I had almost nothing left. Everyone said, you need at least $10,000 to start investing. That felt impossible. Then my colleague Marco told me, Leo, you don't need thousands, you just need to start. So I took 100 and opened my first mutual fund account. An index fund tracking the S&P 500. Would it make me rich? No, but it made me an investor. At this level, you're not investing for returns. You're building the habit. That 100 taught me how compound interest works and that I could actually do this. Your first 100 is like that drop of water in your hand. It seems like nothing, but it's the beginning of everything. Start now with what you have. The habit is worth more than the amount. Level 2. The $500 Survivor. 6 months later, I had $500 invested. Then the market dropped 8% in a week. I panicked. Watched my $500 become $460. My finger hovered over the sell button, but I didn't sell because I'd only invested money I wouldn't need for years. Never invest money you'll need in the next 3 to 5 years. I held on, then did something crazy, invested another $50 that month. 3 months later, the market recovered. That dip became my first lesson in buying low. At 500, you're putting water in a glass. It has shape now. You can see it, measure it, but it's fragile. One wrong move and you spill it all. You will face market drops. Your success isn't about avoiding them, it's about how you respond. At 500, you're learning emotional discipline, the most valuable skill in investing. Level 3. The $2,000 Explorer. By year 2, I had $2,000. This is where things got dangerous. I started reading forums, watching videos about options trading, hearing about 500% returns on crypto. My $2,000 felt perfect to take a real shot. I took $500 and bought individual stocks from online tips. A tech company about to explode. A biotech with a revolutionary drug. I lost $320 in 3 months, but losing that money was one of my best investments. I learned the difference between investing and gambling. I learned hot tips are usually traps. Diversification isn't boring, it's survival. I put the remaining $1,680 back into index funds and made a rule: 90% diversified boring investments, 10% for calculated learning. At $2,000, your water is in a bucket, heavy enough to hurt if you drop it. You have enough to hurt yourself now. Protect your capital first. Level 4. The $10,000 Builder. Reaching $10,000 took 4 years. 4 years of automatic contributions, skipping vacations, driving an embarrassing car. But $10,000 was magical. I had options now. I opened my first 401k. My employer matched 3%. Free money. I'd been leaving free money on the table for years. I started a Roth IRA with $5,000. Pay taxes now on lower income, never pay taxes on growth again. At $10,000, you're not hitting home runs, you're building the foundation. Index funds, retirement accounts, emergency funds. Boring? Yes. Effective? Absolutely. I also made my biggest mistake here. Bought a new car because I deserved it. That $400 monthly payment would be worth $50,000 today if invested. Your water is in a tank now. Real weight. People can see it. But you start thinking about using it for other things. Don't finance depreciating assets when you could build appreciating wealth. Level 5. The $50,000 CROSSROADS. $50,000 took another 5 years. I was 32. This is where middle-class people face the biggest test. $50,000 feels like real money. Like, you should do something big. My parents said, buy a house. Friends were buying properties. I felt the pressure. But I was making $65,000 a year, not ready for a mortgage, taxes, maintenance. So I kept investing in the market. I diversified seriously, 60% total market index, 25% international, 10% bonds, 5% researched individual stocks. Then 2008 happened. My $50,000 became $32,000 in months. I was sick, couldn't sleep. Every day felt like watching my future disappear. But I didn't sell. I kept investing through the crash. By 2012, that $32,000 grew to $95,000. The crisis that nearly broke me became my foundation. Your water is in a reservoir now, big enough to devastate if lost. At $50,000, resist pressure for big moves. When everyone panics, opportunities appear, but only if you stayed in the game. Level 6. The $100,000 Awakening. Hitting 6 figures changed my brain. I finally believed I could become wealthy. At $100,000, compound interest works its magic. Some months my investments grew more than my salary. I'd wake up to a $2,000 increase. Not from work. The money worked for me. But I had to level up my knowledge. Asset allocation, tax loss harvesting, rebalancing strategies, growth versus value investing. I made my smartest decision here. Hired a fee-only financial advisor for $500. She showed me I was paying too much in fees, wasn't optimizing taxes, had no estate plan. That $500 probably saved me $50,000 over the next decade. At $100,000, you're not just an investor, you're managing serious wealth. Tax efficiency, estate planning, insurance. Not sexy, but this protects what you built. Your water is behind a dam now. Serious power. But dams need maintenance, monitoring, engineering. You can't set it and forget it. Education becomes leverage here. Level 7. The $250,000 Accelerator. From $100,000 to $250,000 took only 4 years. Compound interest accelerated. My income grew to $95,000, and I invested $2,000 vively. I started thinking passive income. Dividend stocks sending quarterly checks. REITs for real estate without landlord headaches. Bonds for stability. My investments generated $8,000, $10,000 yearly in passive income. Not enough to live on, but enough for vacations, insurance, or maxing my Roth IRA. I took calculated risks with 5 to 10% of my portfolio. Individual growth stocks I believed in, held for years. Some did incredibly well. But here's the trap: lifestyle inflation. Friends buying luxury cars, expensive trips, fancy apartments. Pressure to look successful was intense. I kept my 10-year-old car, kept living below my means. Financial freedom was more important than looking rich. Your dam generates electricity now. Real output. Tangible results from 2 decades of discipline. Water collected drop by drop now lights up homes. Don't sabotage yourself with lifestyle inflation at $250,000. Level 8. The $500,000 Freedom Seeker. $500,000. I was 38. Everything changed. Passive income was $20,000, $25,000 yearly. Financial independence was visible on the horizon. I got aggressive with tax optimization. Maxed 401k and backdoor Roth, used tax loss harvesting systematically, kept detailed records. More importantly, I started thinking about what financial freedom actually meant. Not just the number, the life. I didn't need $5 million to be free. I needed enough to cover expenses with safety margin. For me, $2 million, generating $48,000 yearly at 4% withdrawal. This is where many make their biggest mistake. They keep moving goalposts. I need just a little more. They sacrifice their 40s, 50s, chasing bigger numbers. I decided $2 million, then I'd work because I wanted to, not because I had to. Your dam powers entire neighborhoods now. But here's the question: when is it enough? When do you stop building and start enjoying? At $500,000, define your enough or chase wealth forever. Level 9. The $1 million Milestone. I hit my first million at 41, 3 years ago. That day, nothing happened, no fireworks. Just a Tuesday where my account crossed 7 figures. But my relationship with money changed. I stopped worrying about crashes because I built a diversified portfolio. Stopped comparing myself to others because I defined my own success. Stopped trading time for money on unacceptable terms. Today, my portfolio generates enough passive income that I work because I love it. I mentor people like you because I remember having 127 and thinking wealth was impossible. The truth, this journey isn't about investment strategies, compound interest, or market timing. It's about patience when everyone's impatient, discipline when temptation is everywhere, believing in yourself when you can't see the finish line. That single drop of water I started with, it's behind a dam now, powering my entire life. Same water, different level. You can do this. Start with what you have. Stay consistent. Learn at every level. And I'll be here to guide you through every step. Welcome to the journey. What level are you at right now? Tell me in the comments. And if you want to learn the specific strategies for your level, subscribe and hit that notification bell. Your future self will thank you.